Good morning, everyone. Welcome to a new episode of Capital Markets Quickie. I'm your host, Endrit Cela. Today, I want to dive deep into what legendary investor Ray Dalio has been highlighting recently regarding the current state of the global economy. So let's dive right in. Ray Dalio, founder of Bridgewater Associates, the world's largest hedge fund, recently voiced concerns about what he describes as the greatest wealth transfer in history. It might sound like good news, but it's far from it. In essence, what Dalio is pointing out is the fundamental truth. You can't spend more than you earn without ensuing debt. And while individuals have to pay back their debts, governments have the added option of just printing more money. But can they keep doing that indefinitely? Dalio's central concern is a massive transfer of wealth from governments and central banks to the common citizen, which, on the surface, has helped the average person weather the economic downturns of recent years. However, this has come at a significant cost. Central governments now have weaker balance sheets and have taken on immense debt to sustain this transfer. And while on one hand we see citizens benefiting, higher net wealth, the lowest unemployment since the 1960s, and significant rises in employment compensation in 2021 and 2022, the governments are paying a hefty price. In 2020 and 2021, there was a huge budget deficit with the US government spending more than it earned. To bridge this gap, they plunged deeper into debt, facilitated by the central bank printing money to buy US government bonds. With the fiscal situation becoming shaky by 2022, interest rates rose, impacting the value of existing government bonds. This shift resulted in losses for holders of US Treasuries, leading to a regional banking crisis, and the Federal Reserve, a significant holder of these treasuries, faced challenges with its own balance sheet. Higher interest rates mean the government's future debts become more expensive, pushing it closer to a potential debt spiral. Here's the bottom line. The government will inevitably have a significant portion of its income taken up by interest payments, which may lead to higher taxes, reduced spending, or even more borrowing. Dalio emphasizes that, like individuals and businesses, governments too have debt obligations. However, they have two tools at their disposal. For one, they can impose higher taxes, and they can always print more money. While these might be short-term solutions, they are not suitable in the long run. Dalio anticipates a possible mild stagflation scenario in the short term, characterized by high inflation and low economic growth. However, the long-term outlook is more concerning. Ray Dalio warns of increasing government deficits and a self-reinforcing debt spiral that could eventually cripple economies. So, how can this situation be reversed? Well, Ray Dalio discusses the concept of a beautiful deleveraging, where economies undergo a series of steps, starting with reducing spending, followed by reducing debts. The next step involves redistributing wealth from the rich to the less affluent through taxation. Finally, the central bank would resort to printing money to stimulate the economy. So, in essence, while short-term measures can alleviate immediate concerns, a long-term strategy involving a mix of austerity, debt reduction, wealth redistribution, and strategic monetary policies is essential to ensure sustainable economic growth and stability. So, what does this all mean? Well, Dalio's insights serve as a reminder that while the current economic situation might seem stable, underlying challenges need to be addressed to ensure long-term prosperity. So let's keep that in mind. That's it for today, everyone. If you want to dig a little bit deeper, you should definitely subscribe to Ray Dalio's newsletter on LinkedIn. It's almost as cool as mine. All right, everyone. Till next time, cheerio.